Hello and welcome to Explain the Charts. Today, November 18th, we're providing an in-depth analysis of the NZDUSD pair, combining current market events with technical chart analysis. Recent news reports indicate a weakening New Zealand dollar due to subdued economic growth and an unexpected rate cut by the Reserve Bank of New Zealand. The US dollar, meanwhile, maintains strength against its peers, further pressuring NZDUSD. Let's look at the daily chart of NZDUSD. We observe a clear downward trend over the past month, with the price consistently breaking below support levels. The 0.5900 level appears to be a significant support level, and we've also observed resistance around 0.6000 in recent weeks. The recent decline has resulted in NZDUSD falling to 3-month lows, a trend in line with the current market sentiment that we just talked about. Now let's switch to the 1-hour chart to examine the price action in more detail. Here we see some shorter-term fluctuations, but the bearish trend prevails. Notice how several attempts to break above minor resistance levels have been unsuccessful. This suggests the bears are in control. Support levels on the hourly chart seem less distinct, reflecting short-term volatility. Zooming in on the 15-minute chart provides an even more granular view of the price action, showing significant short-term price swings indicative of the market's uncertainty. However, the overall trend still appears bearish, suggesting increased volatility. In the context of the recent RBNZ rate cut, the sustained downward pressure on NZDUSD is not entirely surprising. This highlights the strong correlation between macroeconomic factors and price movements. Looking at a specific time frame on the 1-hour chart, from 1696982400000 to 1696992400000, we can see a period of sharp price movement, potentially influenced by a news event or economic data release. The short-term outlook appears bearish with significant volatility, while the long-term trend seems also bearish. The pair's downward momentum might continue if the US dollar continues its strength or if further negative economic news emerges from New Zealand. Key price levels to watch are 0.5850 as support and 0.5915 as resistance on the hourly chart. Breaking below 0.5850 could trigger further declines, while a successful break above 0.5915 might signal a short-term bullish reversal. On the daily chart, the 0.5900 level provides key support. A sustained break below this level would reinforce the bearish trend. Conversely, reclaiming 0.6000 could indicate potential recovery. There's a possibility of a short-term upward correction, yet the broader downtrend looks likely to persist unless substantial positive economic developments emerge from New Zealand or the US dollar weakens significantly. In summary, the current market sentiment and technical analysis suggest a bearish bias for NZDUSD. Important support and resistance levels across different timeframes should be closely monitored for potential short and long-term trading decisions. The likelihood of the bearish trend persisting is quite high, although a short-term reversal is always possible depending on economic data and news events.